Good afternoon, everybody. How you all doing on this fine Thursday, September 22nd, 2022? They asked me to come into the free trading room today and do a little talk about the tools that John's going to be using in his weekend webinar. Hopefully you'll all be there. But we'll go through a quick little spin, do some Q&A, and whatever else you guys want to do. Hey there, Esther. Thomas, Jane, howdy, howdy, howdy. Howdy, y'alls. Okay, so the first question they had for me was, where did the ideas come from? And I think John covered that to a certain degree in his webinar last night, but we're going to talk about it anyway. So let's just go back in time a little bit. And so I've got a chart up here. This is a 1-minute chart of Tesla, maybe a chart you might choose if you're going to do some day trades or some, like John calls them, quick hits. And step back in time, and this is kind of the setup that was used. We've got a squeeze on there, a typical, traditional TTM squeeze, and maybe some moving averages on here. I just took them off here to clean up the chart and whatnot. And so, if you've been with us for any length of time, you've seen the progression of how we've developed the tools, to meet the next sort of, how are we going to make our trading life easier? And, one of the things we always talk about is combining multiple time frames together, because if you are trading this 1-minute chart, you tend to get, really focused down on the nitty gritty of what's going on the 1-minute chart. But that can be dangerous, right? Because the bigger time frame trends are what rule the roosts. And so we always try to pay particular attention to what's going on in the bigger downtrend going on here, this little bounce that's going on in Tesla. So, we've got our TTM squeeze. Of course, that evolved over time into the Squeeze Pro that allowed us to see multiple different levels of squeezes and give us more trading opportunities. And so now we've got 3 different types of squeezes we can trade, but we're still kind of limited in that we only see what's going on our current time frame chart. So that evolved over time into the Multi-Squeeze Pro. So here's now that same 1-minute chart, but we've got a Multi-Squeeze Pro up in the corner that's showing us 5 other time frames with respect to what's going on in the squeeze. So we're in a 2-minute squeeze. The 1-minute squeeze just fired to the downside here, and we're in a traditional mid-level red squeeze on the 3, 4, and 5. And you see the 3-minute squeeze just fired. So we can see how these cascade into each other. And so that's nice. We know what the squeeze is doing. We know what the oscillator is doing on the current time frame. But then, we wanted to say, well, let's apply this same metric or the same idea to the histogram across multiple time frames. And so the multi-histogram was born. And so now we've got our same 1-minute chart. We've got the squeeze information across these 5 other time frames, as well as the histogram information across these other time frames. And so we can see currently, our current 1-minute chart has a red histogram. The 2-minute is red. We are declining from a positive side on the 3, 4, and 5, and the 10-minute chart is still in an uptrend, but from the bottom side of the oscillator. So, and that's kind of where we were at for a long time, and the one thing that was missing from this entire thing is a sense of what those oscillators are doing, aside from what they are in the here and now. That's the problem with the label here, is that it just tells me right now what that oscillator is doing, and I get no sense. I'm kind of losing some information there. And you never want to underestimate the ability of the human brain to process things visually. This is what I would call a digital signal, right? It's just, I have 4 different colors here, and I can just see that. And what I see down here on the squeeze oscillator is an analog symbol. And so I can not only see the color, but my brain is picking out the other information about the trendingness of it and whether there's a divergence presence and all that. And so that was kind of, why we said, all right, well, let's try to put together something that allows us to see what's going on in the squeeze oscillator as it rotates from, red to yellow and light blue to dark blue, et cetera, but across multiple time frames all at the same time. And now we're in the here and now. So let me put this chart away. So now we're looking at the rotation tools, and this is the squeeze rotation tool. And so now what I've done is the same chart of Tesla again, but now what I've got going on here is I can see the squeeze histogram on this tool across the base chart time frame and then 5 other time frames. Or I could just choose 6 other time frames I want, but this is the way we've set it up by default. So it's the 1 minute, the 2 minute, the 3 minute, the 4 minute, the 5, and the 10 minute. And of course, you could use whatever time frames you want, but this is where we're going to start anyway. And so now we are still looking at our 1 minute chart, but we're seeing information across 10 different time frames here. And I've cleaned up, I've taken off the multi-squeeze just for clarity's sake here. But now I'm able to get a sense, and you can see, one of the things that you can get a sense of here across the different time frames is how, divergences, which if you've ever watched price rotate, up and down and up, more often than not, any reversal in price is preceded by a divergence. And it's, any kind of oscillator, you can see the divergence on here, but you can see it very clearly here on this chart of Tesla today that we started, somewhere in this time frame back here while we were still strongly heading downhill. The lower time frames started diverging against price. And you can just kind of think of it as they're starting to push up on price. And then ultimately we got down here to, and this may be a significant level from the chart. I haven't looked. Actually, I have a trend line on there. I'm not sure what it's from, but we're awfully close to that. And so now I've got price diverging on multiple time frames, and then the oscillators all start moving up in tandem here. And so we start seeing the color change on the bars where suddenly now, instead of all the oscillators moving downhill, they're all moving uphill. And then shortly thereafter, we start getting these arrows. The arrows signify crosses of the oscillator across the zero line. And the way we have it set up right now is the darker the arrow, the smaller the time frame. So as these arrows get brighter, it's larger time frames crossing the zero line here. And of course, the coloring, which John discussed a bit last night, has to do with the number of oscillators that are moving up. And so if you've got 5 of the 6 moving up, you get this sort of green color. And then if all 6 are moving up simultaneously, we go into this kind of what they call lime color, which is kind of a yellowish green, indicating that all the time frames are walking lockstep to the upside at that point. And of course, if you watched the webinar last night, John talks about taking these quick hits here where we'll, take the long trade, maybe sell put credit spread down here, and then we take it off once we see an opposing signal here, which is represented by one of the time frames crossing back below zero in this case. And this would be the smallest time frame crossed back below zero. What else can we see here? There are also these reversal dots on here, which show a potentially brewing reversal, and those occur, the dots happen when one of these time frames rolls up. So, what we would, here it is on the largest time frame. You see it down here. We went from red to yellow, and we get a little green dot right here on price, a bright green dot indicating a larger time frame just reversed here. And so that's what the reversal dots are showing us. I think that's a pretty good description of the indicator. Now, this is the squeeze rotation, and then this is the thing about the squeeze histogram is it's a fairly, what's the word I want to use here? The squeeze histogram is not the fastest. It has a lot of smoothing built into it so that the signals become relatively rare. We don't want an indicator, for the squeeze histogram, we prefer something that takes longer to turn, and then when it turns, it stays committed to that direction for a while. But one of the things John wanted to do was let's take the same basic idea here with this, what we've done with the squeeze histogram, and apply that to a different type of oscillator, a faster oscillator, so maybe we can catch the turns a little bit quicker, a little earlier, and hence this version, this is called the trend rotation indicator. We've taken a basic moving average oscillator and applied the exact same idea to it, such that we can use it the exact same way, but maybe in a little bit quicker fashion here. And so, in this particular variation of it, you can see we started getting these first turn signals back here at 10 o'clock, which I believe came a little bit later on the squeeze rotation version because it's a slower oscillator. Slower, but tends to trend longer. So this is the trend rotation version again. So now we've got 6 oscillators across different time frames here. The signal generation is the same, but it is based on this oscillator as opposed to the squeeze histogram. And then there's one final version that I had to put in there just because it's one of the things that I like to think about when we talk oscillators, and that is the trend rotation standard deviation version. And so now what I've done here is I've taken this multi-time frame oscillator, same as we were using on the previous chart, but it's been normalized such that, if you look at a normal oscillator, it's unbounded usually. And so the range of the oscillator depends on the chart you're on. If you're on a chart of a stock trading at $1,000, then the oscillations on the oscillator are big numbers, 10, 15 points. This has now been normalized such that the movements on the oscillator can be read in standard deviations. So this particular move up in Tesla here reached on the smallest time frame almost a 2 standard deviation movement. And if you understand the concept of standard deviation, you understand that once you start reaching 2 and 3 standard deviations, the air is getting rare, if you will. It's getting thin up there, and that move is generally going to peter out. And so that's what this particular version of this does. It takes the same idea from the trend rotation oscillator, but applies a normalized process to it so that you can actually read something into these values in terms of, this initial move down yesterday, or actually it was toward the close yesterday, got us down into the 4 standard deviation range, which is of course why we traded sideways for such a long time afterwards, because price just can't stay down there that long without working off some of that, oversoldness, if you will. Okay, so that's a quick dog and pony about what these tools look like and what they do. So I'll entertain questions that you guys might have about them if you have any. Let's see, will there be a recorded session of this available? I believe so. I think I'm recording it right now, and I'll pass that recording along to the powers that be. Where it goes, I can't tell you, but Lee's a step ahead of me as usual. Can I do the same thing with the ES? Yeah, one other thing I meant to talk about is that this is available for TradingView, because I realize that a lot of people can't use Thinkorswim, or a lot of folks out there in our trading rooms. And so the nice thing about TradingView is that everybody worldwide can use it. And so the same exact tools work the same exact way, are available for TradingView for those of you that can't use Thinkorswim or don't want to use Thinkorswim. And so just wanted to let you know that they work exactly the same. No, the only difference you'll see is that TradingView tends to calculate live values a little bit differently than Thinkorswim. So Thinkorswim will keep these sort of stair-step lines always. TradingView actually shows you the live value of the line at all times on a minute-by-minute basis. So as this chart progresses to the right, these will look a little bit less stepped and a little more realistic, because that's the way TradingView does it. Just different than Thinkorswim. The values are the same on both. So, all right, let me put that away. Okay. ES, yeah, I can certainly put the ES on here. Now, one thing I can tell you about this, I traded a little bit of the ES this morning, but it was in here where we were trending a little bit more, and a little, as soon as I start, for those of you that trade the ES, as soon as I start seeing this type of action where bars are nipping the tops of the previous bars and nipping the bottoms, this is stay out. That's what my experience tells me when I see that type of price action, and let it resolve into something trending again before you start playing. And so if I was interested in this, I'd be looking for shorts, because this is a downtrend once we broke that trend line. And so we're starting to get back into a trendy mode again here, with a lot fewer overlapping candles and whatnot. So okay, let's see. Yeah, this is a 310 MACD line. Though you can change it to anything you want. Honestly, that was the one that John wanted to try to use for quick intraday trades. I'll go back to the regular version here from the SD version. There it is. Love the normalization. Me too, man. I if I can normalize something, I will, because I like the idea of being able to say, yeah, that's 3 standard deviations. And if I'm looking for a counter trend trade, or at least a trade against the direction, if I can see a 3 standard deviation move there, then that makes me, it gives you a little bit extra confidence that price is at least going to slow down. Yep, indicators available on Thinkorswim and TradingView. Class indicators are on the screen. That is correct. I can show them to you all at once if you want to see all 3 at the same time. Yeah, and also there's some other freebies that are getting thrown in. Let me show you those. Well, basically what they are is you've got an indicator that's going to show you a higher time frame Keltner channel, which John loves to use, and you can select the time frame and the Keltner channel you want to use, the multiplier and the time frame. There's also one that's going to show you a higher time frame exponential moving average. And I think John was using he had 3 on there: the 30, the hour, and maybe the 2 hour or something as references. And then the final one shows you the percentage that price is away from a higher time frame exponential moving average. And if you watched last night's webinar, which we posted the recording link up there, or at least I tried to, I'm not good with links, but John was looking for things that were approximately 1% away from one of the, I think it was maybe the hourly 21 EMA. So in any case, those are all thrown in. Or at least the class page shows you where those are thrown in. That's above my pay grade, but those are what those are. Okay, Chickadee, what is the stair-step indicator chart? Those are the rotation tools. John's going to be doing a webinar on this Saturday. I encourage you to watch the replay from last night if you didn't catch it. It was, even if you're not interested in the class at all, if you've ever sat through one of John's webinars, there's always some just good boilerplate educational material in there that's, good takeaways, regardless of whether you attend the class or not. SMB wants to walk through a live example. That's going to be what John's going to cover in the class, so I'm not going to steal his thunder here. What's the difference between the 3 charts? These are 3 different versions of the indicator. So we've got the squeeze rotation that uses the squeeze histogram oscillator. We've got the trend rotation that's using a faster moving average oscillator, EMAs, and then the trend rotation standard deviation, which is this same oscillator but normalized so that the values read in standard deviations. What swing trading, what time frame? I think John's going to cover that, because he has some of these set up on some other time frames. This is just an example here on the 1-minute chart, but he has the time frames that he has set up on higher time frame charts. SMB, how can you tell the number? So look over here on the standard deviation version here. We can see that this move that just occurred down on the 1-minute chart reached about 1.5 standard deviations on the oscillator, and then got a bounce. So that's how you read that. Has anybody tried swing trading with the tool? I think that would be the only one who's got it right now is John. So that would be a good question for him. And again, John's going to explain how he uses the tools and whatnot. He did a fair amount in the webinar last night, so I would watch that first. And then, of course, if you're interested in the class, it's on Saturday. Does it work well with VIX, UVXY? You know what? I don't know. I've never plotted those, to be honest. And at least, Casper, are you an experienced UVXY or VIX trader? The reason I say that is, I mean, I've been around the block here for many years, both at Simpler and in general in trading life. And if you don't know how to trade UVXY, it's a good way to lose money. Your timing has to be absolutely perfect. So yeah, I mean, you might try to use this to grab a UVXY trade, but remember, UVXY is a constantly depreciating asset, and so you got to be very careful with that. Okay, other questions about the indicators themselves, folks? You see how I mentioned earlier that the faster moving average oscillator version tends to grab, is moving. It's not showing anything on our squeeze as of yet, really, because of the histogram is just a slower oscillator, but less inclined to whipsaws. So it's the typical double-edged sword of all things trading. The faster something moves, the more likely it is to whipsaw. The slower it moves, the less likely it is to whipsaw, but the turns come later. Nan, I would encourage you to go back and watch the recording when we're done here. I did a walkthrough of all three versions here early on. Did we test other oscillators? We did not. These were the ones that John wanted to use, and so, when that's what I built for him. I'd be interested. I'll probably go down the road. I mean, one of the things I do around here on a regular basis is experiment. So I've already had somebody in the room the other day request that we try this out with a CCI, which I like to use the CCI myself. So I'll be interested in taking a look at a CCI version and, potentially a stochastic version as well. But that's for future. This is what we're using right now, and this is what John's going to teach in the class. Let's see. David wants to know if the charts will all be. I believe they're going to provide charts, but don't quote me on that. Mirza says there's going to be an indicator install session. Yeah, absolutely. And generally what happens is, there's an indicator install tomorrow. If you have questions, we're obviously always here to help you guys out. And then usually for those that are going to be in the live trading, I'll come in, I'll pop my head in once or twice to answer any technical questions about the indicators themselves or assist in any way that I can. And then, of course, also for those of you that are interested, we're having our live event for the first time in a long time. I mean, the last time we did one was years ago, pre-COVID, but we're having one in December, and I'll be there. I'll look forward to seeing anybody there who comes. It's always a fantastic time, honestly is, just to meet people and see you all live and in person. And then play Texas Hold'em, which is, every time I play that game, it helps reinforce some of the things that I learned the hard way about trading. I'm not a poker player, so. Okay. Any last questions about these? Otherwise, we'll wrap up this session. And like I said, the recording will be posted on the dashboard for those of you that missed the beginning, want to learn the origin of the indicators and basically what we're looking at here. And if somebody wants to post the link to John's replay one more time, since I boogered it up top, that would be excellent. What time will the indicator, that's a question I don't have the answer to, GRL. All right. Thank you, Lee. Appreciate it. Thank you all for coming here and looking forward to seeing you guys in the class if you're there or around the neighborhood, as we say. Everybody have a great rest of your trading week. Stay safe, and I'll see you all next time.